G'day, Binanceans, and welcome to this week's Binance Beach. This week, we're chatting Bitcoin in personal finance, and we're going to try and stay away from the bloodbath that is the markets this morning. And let's talk about Bitcoin for the long term. I don't want to talk about the short term today. Welcome, Chan. Chan comes from Vield, Bitcoin-backed loans in AUD, Australian dollars. Great to have you on the show, mate. Welcome.
Man, thanks for having me, man. I didn't know that this podcast was going until I was talking to you and you said, hey, I've got a spot. And I'm like, hey, man, I'll jump on. But yeah, good to be here.
Awesome. Yeah, man. We run it weekly. For anyone out there listening for the first time, we talk Aussie crypto news. We cover Bitcoin and altcoin price action from the week. And we generally get an expert like yourself to talk through a specific area of Bitcoin or crypto, try and deepen the listener and the user's knowledge. Well, I mean, man, it's been a pretty brutal 24 hours or even like past 7 days in crypto. Bitcoin now sitting down around the 84,000 US mark. Particularly in the last 24 hours, we've really seen prices run away from us to the downside, and a lot of tokens are really looking pretty sad. I think this seems to come off the back of some more tariff announcements out of the US. And it's not exactly a fantastic time to be holding a bunch of crypto, but maybe if you've got dry powder, it's a fantastic buying opportunity. Particularly, I'll call out the 7-day performance of a couple of our leading tokens. XRP down 20%, Solana down 20%, Dogecoin down 20%, Cardano, Chainlink. Man, it's really a pretty brutal week across the markets.
USDC still okay.
Arguably one of the most important tokens to be holding a neutral price. If USDC was down, we'd be in all sorts of trouble. And fear and greed has hit our lowest level for a really long time, since Bitcoin was sitting around $40,000 in mid 2020 or late 2023, which is pretty crazy considering that Bitcoin is still sitting around that $80,000 to $90,000 mark. What's your take on this, Chan? What do you think the markets are doing? Are you bullish or bearish in the short term? Let's do a quick markets chat before we jump into Bitcoin.
Yeah, look, the one thing I always like looking at is sort of M2 money supply. I think that in terms of the amounts, in terms of the money supply increasing, it's the highest amount we've seen in the last 30 months. So to me, it's a good indicator. It's obviously a really good buy signal. Like as you said, if you have any dry powder, good time to get in. We do see a lot of activity as well for our business, sort of these sort of periods. But I think it's you kind of have to just put your flag down and just hold on tight and go, okay, well, just ride through this, because to be fair, that macro environment with the tariffs and stuff like that, that's going to come and go. But if you sort of wind back a year and look at, say, when the ETFs came out, that sort of sparked a positive sentiment. But if you look at sort of the inflows since then, they've been consistent, but the price action hasn't been there. So, you still got to remember that, a lot of the market is driven through sentiment. So it is fairly reactive to sort of that macro news environment as well. But, I think there's a couple of key things to look at, sort of M2 money supply. Obviously the tariffs in the short term, they will cause swings and roundabouts. And I think there's probably 3 key things for the year, which I'm bullish on as well, would be obviously strategic reserves. As soon as one of those come off the cabs come off the rank, it'll open the floodgate. And the other side is China. China will endeavorly at some point have to devalue the RMB. Once that happens, then that's going to, last time that happened, which was a couple of years ago, the price of Bitcoin skyrocketed. And that coincides with them making Bitcoin or crypto or all of crypto legal, then that's going to open up basically the world's largest population to Bitcoin. So I think long term, medium to long term, it's going to be good. Short term, it's going to be a bloodbath. But you just got to ride the wave, and that's crypto for you. Unless you play PUBG.
100%. To spell out the crash overnight for the listeners, the tariff announcements that Trump made were looking at, 25, but almost 20 to 25% tariffs across the board for Europe, for China, for Mexico, for Canada. And those high tariffs have driven a higher inflation expectation. And when we have higher inflation, that means that we have an expectation that the Fed might be a bit more hawkish. Interest rates might be higher for longer. Liquidity might be harder to get. And that is driving the price of risk assets like Bitcoin down. What's pretty interesting, and a side note, is that gold, I think, has been pretty strong. I think it might be up about 10% in the last week or so. Sorry, it might be last month or so. And Bitcoin down about 10%. So, yeah, I think while Bitcoin has that store of value and safe haven status sometimes, I think we're yet to see it really respond positively to these kind of announcements. But we've shown this BlackRock report on the show a lot in the past that shows an initial dip for Bitcoin and then outperformance over the following 7 days, 1 month, 3 month period. So it will be interesting to see how we rebound both for Bitcoin and for crypto more broadly. But definitely a bit of a nervous time to be in markets. Let's kick on to Bitcoin and the future of Bitcoin in personal finance. First of all, before we get into kind of how people are using Bitcoin, I guess this period of the market is a perfect time to talk about how to manage volatility if you are looking to use Bitcoin as a part of your personal financial strategy. So let's talk about that. Bitcoin is a volatile asset. It's still a risk asset. How do you manage that volatility and that risk as an individual when you're holding Bitcoin, Chan?
Look, I think sometimes it's good not to pay attention to the markets. If it depends on your perspective, I dare say majority of our customers and people that we talk to in general who hold Bitcoin, and generally 99% of their portfolio is Bitcoin. They tend not to look at sort of the short-term swings. They buy their held Bitcoin for a number of years, and they go, yeah, look, the long-term profitability is what we're looking at, right? They look at it as a sort of like a generational asset that they're going to pass down to family, and they've structured their lives around that, in terms of setting up various trusts and things like that. So, it's almost like don't sweat the small stuff. When you're playing the Bitcoin game, unless you're trying to buy in and out, which is incredibly hard to do, and I really don't recommend it for anybody unless you're really sophisticated and advanced. It's something that you generally lose 99% of the time. The best method is buy and hold and don't look at it. And maybe every 3 months take a look. That's it. But these things always happen. Especially as you mentioned before in the markets review, the tariffs affecting the price. Those are with Trump a bargaining chip, and we're going to see swings and roundabouts in the short term. That's just the nature of things. But the best way to do it is just be really objective. Understand that what is your goal plan? What is your plan? What is your goal? How long do I want to hold this asset for? Is it for the rest of my life? Is it for 5 years? Okay, well, I'm going to hold it for a year, 2 years, 5 years, the rest of my life. I don't need to look at it every day. That's just going to drive me insane. And then then you become personally involved with it, and you become, okay, we've got a down day, now I'm going to have a shit day. Choose my French. Now we're going to have a good day. I'm going to be happy. And those sorts of things, in a micro, sort of view, isn't good for anybody. And I think it's just understanding, having that sort of long-term view instead.
100%. Zoom out. It takes a pretty brave man to short Bitcoin, given its performance over the last 15 years. I saw a bunch of great scolding articles this morning from anti-tech journalists, and I feel like that's often a bit of a bottom signal. So hopefully we see a nice bounce. But great advice in terms of trying not to get emotionally tied up in your portfolio. I think the times in the past where I've felt the gut wrench, it's like, okay, cool, we need to step back, zoom out, don't get
Yeah.
distracted by the volatility. Go and study more, learn more, get your head around macro, get your head around this asset, learn more about, the technical or the economic principles of Bitcoin. And it's a great distraction to go and teach yourself and learn from the market volatility.
Yeah, I think that's the distinction between gambling and investing, right? In the short term, when you're trying to, look for the swings and roundabouts and take advantage of things, that's you're essentially kind of, taking a gamble there, right? Because you don't have time to make the research, that sort of thing. When you're looking at long-term view, that's an investment, and you need to be able to differentiate those two things. Are you a gambler or you're an investor? If you're an investor, then, like you said, zoom out. That's perfect.
Well, let's kick into how people are using Bitcoin as a part of their journey towards the freedom of money. Yeah. How are people using Bitcoin in their everyday lives, Chan?
Well, a lot of customers have accumulated Bitcoin over a long time. They've been quite early. Brought Bitcoin in the 2010s, and now they've gone, okay, well, obviously with the last sort of pump that we had, where we're hovering around this sort of now into the 80s, but when we were around that 100 mark, we saw a lot of people coming out, okay, well, what can we do with the asset now? I have mortgages to pay. I want to buy, I have personal expenses to take care of. How do I utilize this, but don't want to sell the upside because I've had a great journey so far. And it's really just, I think that's the one thing with Bitcoin. It's great to have, on paper wealth or on chain wealth, but, being able to realize that without losing upside, that's what we're finding people doing at the moment, and, I think with various countries around the world around how capital gains tax works, people don't want to sell. People will, go, okay, well, what's the point of selling if I'm going to lose 50% of, the gains that I've had? So they're trying to find ways to go, okay, well, how do I minimize the risk of sort of capital gains tax? And, lending is an easy way forward there.
Yeah, I know Saylor talks a lot about that too, about the idea of not selling these assets in the long term and borrowing against them as a strategy. And I think the way that CGT is set up really incentivizes people to consider holding for long term, which is great, right? Like, not everybody is a day trader. That's not everybody's best strategy. Can you take us through quickly how Bitcoin back loans work and how users can take advantage of them?
Yeah, look, there's a couple of different models out there. So just to sort of wind back in 2023, we tried a few different ways to do these loans. Some of it was on chain. We looked at synthetic models of creating synthetic loans. And going back to on chain, using Aave or something like that. It's a great model, but it's not scalable. I think the sort of risks that you run with Aave generally around flash increases of interest rates, interest rate spikes. There's obviously a bunch of credit contract risk involved as well. And the other side is just clarity around CGT. It just really isn't there as well. I think that's one of the things with DeFi, right? DeFi is great, but it's so far ahead of the curve that that you're really in the gray zone in terms of what your liabilities are. So we looked at all of that and said, right, let's just keep it really simple. The way that we do our loans is basically it's a three-party agreement. So there's ourselves, customer, and the financer. We go out, the customer comes in, applies for a loan, does KYC, we do our checks, check the serviceability requirements, and then they apply for a loan, and then we go out to raise private debt. And basically say, hey, do you want to fund this loan? XYZ wants to borrow X amount. Here's what the profile is. And here's basically their ability to repay. And they normally say yes, because we generally only present cases that we think are going to be viable. And then, the loan gets funded. That's pretty simple. So we don't use the underlying asset to generate any yield or staking or anything like that. It purely gets held in a individual wallet, just a security. And we give that public address to the customer as well, so they can see what's going on at all times, which is nothing. So, but it just gives them that transparency, right? The way, it's funny, Australia has like a big affinity with houses, right? Sort of saying like, safest houses and things like that. It's entrenched in Australian culture. And with Bitcoin, we modeled our loan product to sort of mimic that. You can drive up and look at a house and see that it's still there, right? So we were said to ourselves, okay, well, how do we give full transparency to a customer? So we give an individual wallet per loan, give them the address, they can have a look at it. Perfect, right? The major difference is we don't take an interest on the Bitcoin itself. It purely gets locked into a wallet. Customer can see it. If they want to withdraw it, they can. They'll just need to pay back what they've borrowed and the interest, and that's it.
Man, that's cool. I think, modeling it off property model or making it feel like property loan sounds like a really smart idea too. God, we love property in this country. Anyway, how can Bitcoin be used in personal finance for individuals beyond loans and a store of value? What do you think is coming in this space?
Look, if you just look at DeFi, right? DeFi is so far ahead of the curve in terms of, sort of what retail finance, TradFi world is doing, and all the innovation is happening there, I think the next probably cab off the rank would be, sort of lending through liquidity pools, and where you have, a positive sum arrangement with, the finances on one side earning yield, and the borrower is getting a great rate on the other side, right? That's sort of probably the next cab off the rank there. I'm not so bullish on, I am, but not, in terms of replacing the SWIFT system. I think that's, stable coins play a really good role there. In terms of everyday transactions, there's the issue is always going to be CGT. That's it. And I think that's the innovation's already there. It's just a matter of the regulations coming up to speed and being able to meet that. That's always sort of the hindering point or the slow point there. So, I think the first thing is going to be always, if you look at your basic financial products that are, your branch down the street for supplies, it'll be those products, but in DeFi, so potentially cards, loans, maybe potentially, more ETFs, but more ETFs that are around maybe altcoins potentially. But, just to open up, I guess more retail type investors into that space. I think that's sort of where it's at.
Yeah, I don't know if I'm dropping some alpha here because I know a couple of card companies are chatting with DeFi wallets like Trust Wallet. I know MetaMask just teased a MasterCard, I think it was. So there's definitely a lot coming down the pipeline there in terms of linking your DeFi activity and your self-custody wallets to spending in the real world. And that's going to be really cool.
Yeah.
What do you think about Bitcoin versus crypto? Do you think that Bitcoin is starting to decouple from crypto a little bit? Or do you think we're just in the part of the cycle where Bitcoin dominance is really high and we don't yet have the rest of crypto catching up?
Yeah, look, I think the one thing I always like to look at is sort of the Google search trends, right? And Bitcoin always sits above crypto. And you always see spikes. But what you like, if you look at, say, when Trump came out, we're not going to talk about that, but that smashed everything on that day, right? But there's, I think Bitcoin dominance is always going to be there. It is always the entry point for most people. People used to think ETH is silver, Bitcoin is gold. I think Bitcoin always remain gold, especially with the adoption that you're seeing at a sort of TradFi level. And in terms of decoupling away from crypto, I think it's already has, right? If you go to a Bitcoin meetup or talk to a Bitcoin maxi, they don't even want to use a wallet that is associated with any altcoins, which is anything in their mind other than Bitcoin. They want a pure Bitcoin wallet only. That's how focused they are. But horses for courses, right? So I think there's always going to be an element of separation between Bitcoin and the wider community. But that being said, that the two, this is actually one of the things I love about crypto is the sort of subcultures attached to different asset classes within crypto. You've obviously got Bitcoin maxis, you've got degens, things like that. You've got people who background traditional finance, and just buy into blue chip, crypto. It's from a psychological point of view, it's fascinating. But yeah, I think Bitcoin dominance is always going to remain, and Bitcoin is always going to be sort of decoupled away from the wider crypto community, because I just think that there is this really strong core, of Bitcoin sovereignty, in terms of the community that's never going to change. And these are the guys that go out to, and orange pill people, and that, that's just the nature of it. And I don't think that will change.
Yeah, and I really feel like what I'm seeing in the market at the moment from general sentiment is people are coming in at the meme coin end of crypto, and they're onboarding through that, or they're people who are really concerned about, the cost of living, cost of housing, and are concerned about fiat debasement, and are looking for a store of value that's accessible, that's liquid, that's easy to invest in with a small amount of money. Man, I bought some shares the other day with ComSec and paid a $30 brokerage fee. I was like, oh man, like this is the use case for tokenization. This is the use case for blockchain. And like there's really, I think that there's two ends of entry points at the moment for retail users. But it's really cool to see people learning about money, learning about hard money, and coming in at the Bitcoin orange pill end of the spectrum, and then having this like real just orange pill Bitcoin maxi kind of mentality where they're just like, yep, this is me, I'm staying with digital gold, and this is what I'm going to use to combat fiat debasement and combat the rampant inflation that we're seeing. And I think the network effect that Bitcoin has too is huge, and I agree. I think it's well out in front of the pack. And then you've almost got Bitcoin as the leader for store of value, and then you've got this red hot competition for layer ones and layer twos in and below it. And it almost feels, while that competition is raging here, Bitcoin's network effect is just sitting on top of the market, sitting happy, 60% dominant, happy, moisturized, in its lane, doing its thing.
Even if that goes down to 30% one day, that's still dominant. Like that's still massive. That's a huge number, right? Like, crypto as an asset class, like 2.7 trillion, and Bitcoin's like 1.6. Even if that drops down to 30%, that's still massive, right? Like, and I think, what you mentioned around just Bitcoin as an asset is great, but I think the one true value of Bitcoin is the education behind it. And I think where people start learning about displacement, where you're talking about, learning about money supply, learning about what a dollar is worth today versus what a dollar is worth tomorrow. All this sort of stuff is stuff that people really should know about. Why the cost of eggs has doubled, but the price of TV has come down, fivefold in the last couple of years, right? It's people need to be aware of these things for their own good, right? Unfortunately, things for inflation and other couple of reasons, don't cost the same as they used to. But unfortunately, what you earn on a daily basis generally doesn't change. It's just about educating yourself and finding better ways to put the right foot forward for yourself and your family.
100%. And I think that's a great place to finish today's conversation. Distract yourself from the market bloodbath by going and reading the Bitcoin Standard or reading Broken Money by Lynn Alden. Distract yourself with some really great educational content and resources. Go and watch the Sailor series. Learn about money. Don't look at the markets. Ignore noise. Zoom out. Stay comfortable. Hey, thanks so much for jumping on, man. It's great to have you on the show. Appreciate your wisdom and your perspective. You guys are building a super cool product.
Pleasure, man. Thanks for having me.
All right, we're going to finish with a disclaimer, as we always do, but please make sure to like, subscribe, and tell us who you'd love to have on the show. Ask questions, and we will see you next week, Binanceans. Have a fantastic weekend. Signing out. Bye. Please note that this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational purposes only and is not responsible for any content or insights provided. This information should not be considered as financial, tax, or investment advice from Binance.